Yo, YouTube, it's your favorite guru from Timu. And today we're going to be talking about trading entries, how I enter in for a trade, and how you can use my strategy, which this isn't the strategy video, that's the next video, but how you can use my trading strategy to find entries and stuff like that. Now, before we get into all of that about trade, entering into the trade, it's one thing you have to understand. You have to understand that you can have the best trading entry in the world if there was one, but if you're not willing to actually take that trade, it doesn't matter. You get what I'm saying? Because you're just gonna watch yourself lose money. That's it. Like, not by actually losing money, but you're gonna actually watch the money walk away from you. Now, I'm not telling you just go be out there, be risky, click buy or sell, buy or sell. No, that's not what I'm saying. What I'm saying is you need to have the guts to actually take a trade. You know what I'm saying? Like, that was one of the main things with me. I used to struggle with having the actual fuel to get in the market and actually take the trade. I'll let a trade run off on me, and that's what will hold you back. You can be a really good trader, you can probably find the best setups, and you probably don't never miss, but if you're not taking them, those setups don't matter at all, right? So please, if you see a setup, take it. Do not be scared. Let it play out, do its thing. If it goes to your stop loss, it goes to your stop loss. If it doesn't, it doesn't, man. Oh, freaking well. But like I said, bro, all that matters is you take it. And I promise, once you start taking those trade setups and you start actually feeling it like, oh, I can actually do this, you will see that, yeah, man, it's actually easier than you thought. But with that being said, let's go ahead and get into the actual video. I did not mean to stop recording, but now I got to go in, chop it up, and let the thing freaking... I don't feel like doing all that, bro. I got to put two clips together and click export. That's too much work, and I'm just playing. All right, let's go ahead and go over the trading, my trading strategy. Dun, right? So, first off, how I trade is I trade, semi support and resistance. I will enter off of the fair value gap. So let's go ahead and go over those first. Say you do trade fair value gaps, or you trade order blocks and stuff like that, waiting for pullbacks like that, or a little liquidity sweep and a inverse fair value gap. Let's go over those first, because those are very easy. So what you want to do, say this fair value gap right here. Well, no, let's go over to one that already has played out. This order block right here today, right? So how I used to trade is, of course, I have all of my, and I still trade like this, I have all of my confluences added up. So I have, you see this -4 spot right here, we got this -4 spot, we had a reversal on it, then we got this order block, and blah 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 blah. I'm gonna draw it all out so y'all see what I mean. What really matters, because I'm not teaching you how to find the entry, I'm teaching you what to look for once the entry is there, right? So boom, we got this order block, boom, we got this previous freaking level. Okay, tapped into a 15-minute order block, standard deviation, and we had an SMT right here as well, because ES took these lows and NASDAQ didn't. Perfect. This is really good. This is what you can be looking for. These are not entry models. These things right here, these confluences, these help you make sense of a trade. These give you more confirmation of a trade that you can take. You do not just want to be taking trades just because you see these things playing out. You want to actually see what you're expecting. So if you're looking for buys, you want to actually see buyers stepping in the market. You don't want to just be taking trades just to take them. You want to be waiting for buyers to actually step in. So, like, okay, boom, this trade played out, right? And you could have caught buys, but most people will be like, bro, I could have bottom ticked this. Nah, bro, you don't want to be doing that, because bottom ticking all the time will only hurt you. What I mean by that is, if you're only looking to bottom tick, right, and to catch the best looking trade, you will fail a lot of the time, most of the time, because it's not going to always be there. So let's go over this, okay? Dang. Shoot, I was in for sales. I ended up catching like $200 before I started. It started dropping more. But yeah, so so these things right here, these confluences, these just help you make sense of your trades, right? These don't actually oh, I should get in because I see an SMT. No. Oh, I should get in because I see it for value gap. No. It's how it reacts off of those things. So let's go over. We got and it's crazy that this ended up playing out today. This SMT, all this, like, this is an A+ setup. This is what I want to see. But we got a SMT standard deviation into an order block. Cool. Okay, this is a really strong setup. Now I need to wait for my entry model. So once we get tapped into these little things, we go down to the lower time frame. I want to use the 3 minutes to the 15 minutes to actually catch a trade. And what I want to see is, like I said, actual strong buyers stepping in, right? So as we can see right here, we begin to chop in this little area. This area right here, we begin to chop. Okay, if we're chopping in this area, you can enter off of anywhere in this area because it's so much chop. We don't know where we can enter it. That's why you wait for the breakout, right? Now, this trade right here, I'm going to wait for a actual breakout onto the upside. Now, like, and what I mean by a breakout is an actual candle close. That's why I like to use the 3 minutes, the 3 minute time frame, because on the 1 minute time frame, we look on the 1 minute, we got all of these candle closures below the box that we just made, or this demand zone, whatever you want to call it. But if we go to the 3 minute, these look like little wicks, right? So you want to see an actual strong buying candle close or selling candle close out of this chop zone. Once you get that, you can then enter in for buys, sales, whatever it is, and you can put your stop loss however you want. I usually go for 15 to 20 points, so we put our stop loss right here, and then go for the next source of liquidity. Excuse me. So yeah, that's one way, right? That's one way. Wait for the reaction on the confluence and see how we react, right? That's one way I like to trade. That's how I find my trade setups. I like to make sense of them. Okay, what have we done, right? That's the main thing. What have we done? Now, the main way I use my strategy now, let's delete all this. Main way I use my trading strategy now is I wait for a reaction off of a specific level, right? So or to break out of a specific range. Now, what I mean by that and how do you use this is two things that matter. What is a range and what is the trend for the day? Okay, so I should have put that what is the trend for the day as the first thing. What is the trend would tell you, okay, this is what I need to be looking for in order to be taking buys or sales, right? So on the 1 hour time frame, you can use this. I don't typically use that. I don't use this for my bias anymore because of the fact that it doesn't really help, right? It really actually, for me, for example, the only thing it helps me find is the overall trend for the week or the day. But like for just that, just for the right now trading session, because in the lower time frame, it can be something completely different. So I usually just use this to mark out for value gaps, if we tapped them, if we broke them, and just see what we did to these for value gaps. As you can see on this for value gap, right? I mean, not for value, this 15-minute order block, no, not 15-minute, 1 hour order block, we actually held and we started pushing back up to the upside. So I'll be looking for buys, right? But if we go down to the 15-minute right now, buys are not doing so hot, all right? So that's why I just use that to get an understanding of it. But on the lower, like on the 15-minute and 30-minute, these are my babies. This is what I use, okay? So, of course, right now we have a lower high. Lower high, lower low, lower high, lower low. Now, if you're trading a breakout for a demand zone or whatever, what matters is the second thing that happens, not the first thing. You never want to be the first person to enter in for buys or enter in for sales. Typically wait for a pullback and wait for a reaction off of that pullback, or wait for a breakthrough, wait for us to come back. So right here, for example, let's go down to the lower time frame, like the 3 minute. Hold on, let me go to the 15-minute and draw this out. For example, right now, and this is kind of crazy that it's all playing out in front of us right now, right? Right here, as we can see, if we go to the 30-minute, this might be a 30-minute fair value. It is. Draw this out just in case so we can make sense of everything. But yeah, so boom, as we can see, we ended up breaking out of this chop range. As you can see, Asia and London didn't do anything but chop, right? We didn't do anything but chop. And this is what I mean by a range. I'm going to be breaking this down very soon, though. We didn't do anything but chop. We ended up breaking out of this chop range, and then we had a pullback, and we came back down, right? So the main thing you want to be looking for is what we do after we break out of it, right? Once we broke out of it right here, you don't want to be looking for sales, right? Sometimes it can run off from you and stuff like that, which is cool. You you can still enter somewhere if it's dropping, if you see sales or buys are still prevalent. But it's cool if it runs off on you. Most of the time, we're going to have a pullback, and that's what we tend to do. We had a pullback. As you can see, we tap into a little minor 5-minute fair value gap right here, and then we proceeded to push down lower, right? And the second time we broke out of this range, these highs and lows, what did we do? We continued down lower. We continued down lower, and the same thing right here. We broke out right there. Okay, we have a breakout, and if we look over here, let's delete this box. We look over here, we have another area where we chopped it. Now this is another range. Okay, I'm going to, like, you're going to see a lot of these ranges, right? And it's going to make a lot of sense once I show you how they work. But we break out of this first time we break out of this range, we actually make us a decent push through. You could have been like, dang, I could have missed sales. You could have still entered if it seemed pretty like sales are pretty strong. You will know when sellers are winning because just be no clear signs of buyers pulling back. But if it's always going to be a pullback, especially if it's for sales like this. We broke out of the range the first time. Now we're pulling back, and you could have caught sales again. Wow, and this happened in the live markets. The market is moving right now. You know what I'm saying? I didn't even plan for this. Another thing. Right here, for example. We got this range right here. We're just chopping. We break out of this time right here because it's going to look like we pull back. But right here, we actually break out of it. We come back into the range, and we dump again. Okay, that's the main. This is what I want y'all boys to understand. Where you don't want to be entering in just because of you feel like it's gonna happen or because of a bunch of confluences. These things have to make sense. These sales make sense because we are creating lower high, lower low, lower high, lower low down here. More than likely, once we come back into this range that we were chopping back in at, we're going to dump down. Okay, look, we come in here, wait for a reaction, catch the sales back down. It's that freaking simple. Now you can use little other hacks and stuff like that. Like if you want to go down to the 1 minute, and once we get a pull into this area, you want to wait for an inverse for value gap. Like you want to enter right here, like below this candle right here. Enter below this candle right here, something like that. You could enter, but as you can see, we're still chopping. I would have still used on the lower time frame. I would use the same thing again, a range. Once we came back into this range right here, and we broke out of this range with speed, I could have entered. We broke out of it right here, pulled back into it, could have caught sales again. It's the same thing, and the reason that is because how the market moves. The market moves to make balances. All right, so let's go over that and I'm going to go more in detail. I have already went in detail with it already, but I'm going to go more in detail with it on my next vid. But the market moves into ranges, balances, whatever you want to call it. As y'all boys know, what a range is an area where we just chop like this, right? We're just chopping, not really going anywhere. And if you've been trading in this October, you've been seeing a lot of these, right? So how do you use these to your advantage? Now, like in the market structure video, I told you want to wait for a sweep of liquidity and then a push down or whatever. You don't have to see the sweep on the lower time frame because on the lower time frame, you're probably not even going to see the sweep. It's going to actually look like a real deal candle. That sweep would be on the higher time frame. But the market moves to places like this. So say we're all the way down here chopping up. We just been chopping over here, for example, and just came up to the uptrend, right? We just broke out of this range. Now we're going up, down, up. Now we don't have nowhere to go besides this chop balance. And that's where the market is drawn to. This balance up here is looked at as a magnet, right? So that's why it's very important to look for the sales after you break out of it, because once you break out of it and the pull back into it, you're going to actually see what the market wants to do. Because when we're in this range, you can't figure out what we want to do. We're just going up and down. But once we break out of it, you can see a clear sign that we want to either go down or continue lower. So once we break out of this range right here, you can see we want to go. If we break out like that, we pull back to this range and we hold a pretty strong buying pressure. Okay, I can look for buys. I can catch buys. And the same thing for sales. If we break out of this range, hold on, where is it? break out of this, boom, pump, come back to it, and we dump back out of it again, that pullback that I was telling y'all about, we can look for sales. Simple. That's why you want to wait, and you don't want to be the first person to make a move. Now, sometimes the first person that makes a move is they get the good piece of the pie, right? But a lot of times the market still pulls back, and you still are allowed to catch those sales or catch those buys, whatever it may be. Now, how I use it, for example, is I usually draw out using, I'm not going to tell you yet because you got to come to the next video. I can't leak everything now. Even though it's free, I can't leak it all right now. I get my little Fibonacci tool, and not Fibonacci tool, but whatever this thing is called. This is how I find my levels, right? And this shows me where the market was most balanced at. Like I showed y'all where we were chopping at. This tells me, okay, this is where we're chopping at, and these highs and these lows are going to be my support and my resistance zone. And the reason that is because this is where we most respect it right here. When we got to that low or got to these highs, we had almost an instant reaction to the opposite side. So once we got to this high, we had an instant reaction down to the sell side. Once we got to these lows, we had an instant reaction up to the upside. So this is how I find those, and these are really good support and resistance bands for me, right? As you can see, today we had a really good one right here. This is the breakout what I'm going to show you. We were chopping right here. We broke out of it. We pulled back to it. You could have ended up catching buys. Right here. Once we got this little pullback to it, could have caught, I go for 50 to 60 points. Not 50 to 60, 50 to 80 points. So you could have had your take profit would have been right there. Stop loss below this low. Boom. Nice little trade. That's actually too much of a stop loss. Boom. Something like that. Right? This could have been your trade right here. That'd have been clean. That would have been 10 point. You could have let that play out overnight. Would have ran through. Why? Because if we look at this, we have clear signs of us going up to the upside. Like I told you, remember the trend. You want to see the trend that you're in. We break up to the upside, come back up, and once we break above here, we break out of it with strong buying pressure. We pull back down into it. It's not really strong, but you get what I mean. Pull back down to it, and you could have caught buys like that. Now, this is a really good example right here where we sweep liquidity right here. So this would be our power 3 or our market structure, like I was telling y'all. Sweep look. Oh, that is not what I was trying to do. We have our little accumulation phase. We sweep liquidity right here. Ended up taking out these highs, and we begin to push down. And where do we push back down into? This range. And once we push down into this range, we don't just push down through it just with any type of selling, like with any type of selling pressure, just regular, like we moving down. So we push through it with speed, leaving this 15-minute for value gap behind right here. Also being tapped back into this range over here from last night, as y'all boys can see. Tap back into this range from last night as well, and if we draw it out again, it'll give us the exact points that we should be looking for to take sales. And if you look at this low, could have took sales at this low and could have had a 9-point stop loss. 9 points. 9-point stop loss, and actually, let this run all the way down here, right? But okay, cool. You didn't, and this would have been the second pullback. Okay, you didn't catch this second pullback. This would have been the second time we broke out of it. You didn't catch that. You got a third time once we break out of this range right here, and then we break into this range. Now we're in this balance over here. You see why I say the market moves to the balances, right? So we are moving back to a previous balance that we were just at yesterday. Now we're in a new balance. We made a new balance today. Now we're pulling back to the second one because the market has to move like that. We're not just going anywhere in the market. We have to move to previous balances, and that's how we continue going up higher, because these previous balances have previous orders, have previous entries. People in the retail stores, banks, all of these areas, the AI bots that be trading, they got these in their databases where, okay, we did this over here or we did that in this range. So they want to go back to that range. They want to get priced to a certain area so they can buy it and sell it. It's that simple. That's why we travel to those balances, right? So here we break out of the balance. We pull back into this balance right here. So what I mean, We break out of this balance right here, This is where we break out of it. Could have caught sales down right here. Could have caught a nice 40, nope, even more. I think that's 50. Could have called a nice 50 points down to the downside. Nice little trade. Or you could have waited for the pullback because this was the first pull. This was the first breakout. So if you didn't catch this first breakout, could have waited for the pullback back into this balance again right here, which would be this area over here. Once we got to it, you could have waited for sales to present themselves. You could have caught the second breakout of this range when we broke through this low right here, or you could have caught when we stepped back into the balance and we started rejecting over here. Now, what I mean by rejecting, if we go to the 1 minute, as you can see again, what do we have? Another balance. Oh my goodness. YouTuber face. All right, going back, but yeah, we got another balance where we're just chopping it, and you could have just waited for a breakout. And as you can see, we're still traveling back into that balance. And once we come into this one, we begin to chop a little more. See, the thing what I want y'all also to understand is when we're not in any form of balance, like up here, there is no balance up here, right? And that's why we're pushing down with speed. But once we come back into this balance over here, we begin to chop again. I'm really just spitting out a lot of sauce for y'all boys, and it's kind of crazy that I'm giving y'all this for free, just showing y'all how to do this. But yeah, this is what I use. This is how I trade. It's because it's very, very simple. Like I wait for a break. I look for the trend. We got lower highs, lower lows, lower high. We break out of this balance, which was a previous balance over here. We break out of it again. Now we're going for a lower low, and it's the same thing with buys, bro. Same thing with buys. Even though we've been on the downtrend, it's the same thing with buys. Here, for example, go to the 15 minute. Delete all this. Boom. Get our balance. We see balance right here. See balance right here. We do it to like that. We end up breaking out of it. We end up breaking out of this balance, but we don't get the pullback that we caught. You know what I'm saying? Which is it's okay. It's okay. But what I want y'all to see is that once we do get the pullback, we actually get a reaction off of it. Even though we don't get it right here, we draw this out. Boom, bam. Where do we actually got a reaction off of it? I can't remember where. We got a reaction right here, but it was somewhere we got a reaction off of it. Okay. That's not a good buy example. Still could have caught buys though. Right here were pretty good ones. Right here, yeah. As we can see, I remember taking this trade last week. Draw this out. Boom, bam, got that balance. As y'all can see, we break out of it. You could have caught sales and it pulled back to that high again. We could have caught the breakout trade. But once we break through it again, we end up breaking through it with what? Speed. We're not just showing clear signs of buyers aren't showing any sign of them selling or going downwards, right? Or them chopping up or anything like that. They are winning. So they break through here. What I'm going to wait for is the pullback. And that's what we get right here. We end up pulling back to the point of control, pull back to the high right here. You could have caught any of these and ran it up to all-time highs. You get what I'm saying? So what I usually look for is to find my trend and to see where if we can, or have we created any chop zones, like right here, for example. Got this whole little chop zone. In chop zone, what I do is do it like that, because this is where we mainly had our highs at. You don't want to just be putting at the highs up here. You want to put it at where you mainly had the lows at too as well, something like that. Catch our breakout trade. We end up breaking out right here, got the breakout, we came down, we end up pulling back up into it, chopped around in here, could have caught sales down to the downside right here, and boom shakalaka. How many points would this would have been? It's been 100 points down to the downside, and you could have called them just like that. Like I said, I don't go for 100. Do something like that. Could have went for this set of liquidity or this right here. And boom. Now I'm going to call this the ARP, area, range, and then I forgot the area, range, and then push and pull. So what I mean by that, we're pushing out and we're pulling back out. The area, it'd be this, right, this would be, no. I forgot how I set it up. I can't make that yet if I don't know how to set it up. Okay, So let's set this up together. All right. Area would be where we're at right now, right? So the area be if we're in a downtrend, a uptrend, anything like that. That'll be our area. For example, where's the price at? If we're going down, where's price headed? Where's price could be going? Where price also wants to go. The range would be this. We're looking for a range, right? This is the range I've been talking about, and then our pull will be the pull out of here, or no, the push will be us pushing out of the range, and the pull will be us pulling back into the range. You get what I'm saying? Right here, for example, we this kind of look weird because we pull and then we pull, then this would be our pull. We pull. Push, pull, pull, push. Okay, yeah. So if it's sales, it'll be pull. No, if it's sales, it'll be push and pull. If it's buys, it'll be pull and push, right? Because we pull. Y'all get what I'm saying? We push out of this one and then we pull back. We pull out of this one and we push back. Yeah, there we go. There we go. So y'all boys, I'm working on this. Right, I'm working on this, but I just leaked a little bit. I'm gonna show y'all the whole trading strategy tomorrow though, because I know y'all probably confused on how to find ranges and stuff like that. But we gonna do that tomorrow. I hope this helped though, man. God loves y'all boys. I catch y'all in another video. Peace out.